Morning Market Day Report. So glad you're with us this morning as we look through the row crops. What's happening with the trade? Well, let's start with the corn market. And corn now a nickel lower on the front month March at 4.88 1/4. We're trading $5 on the May contract. That's down 4 3/4 cents. Over to soybeans. What's the trade look like this morning? This market has actually been higher week over week, but is now, well, in danger of losing that, moving to the negative side. March down 5 3/4 cents, 10.51 1/4. The May contract 5.5 lower, 10.66 3/4. Soy meal contracts have been under pressure this year, down 11%. Year over year, we're in the red this morning, and soy oil contracts have been down over 4%, and soy oil contracts this morning are in the red. Let's go to the wheat market now, and July, Chicago, 5.99, that's up 2 1/4. Hard red, July is new crop up 2 3/4, 6.13 1/2, and the December contract for spring wheat is 6.65, and it's down 1/4 cent. Finally, cotton market in New York is up 3 points on the December, 68.75. Let's go to Chicago. That's where we find the vice president of Zaner Ag Hedge, Ted Seifried. Okay, Ted, a lot of action this morning in the row crops. What's happening?
Yeah, Tony. Well, first of all, we continue to watch weather in South America, and that's an on again, off again thing. We are watching that Brazilian harvest for soybeans, but mostly we're watching that because the second season corn planting. We know that the later that corn gets planted, the more risk it has going into the tail end of the season, which is their normal hot and dry time frame. So we're worried about grain fill there. But whenever they're making some better progress with that, then, that takes a little bit of the weather premium out of the market. But I think the big thing that we had today is the soybean export sales were really pretty poor. Now, this is a time of year where this starts to happen. We sort of hand the baton off to South America, or Brazil in particular, and that is this starts their export window. However, with the concerns that we have about Argentinian weather and the concerns that we have with that delayed Brazilian harvest, we were kind of thinking, well, maybe we should see a bigger influx of some late season sales for us. But the last 2 weeks, Tony, have really been poor. This week, soybean export sales only 387,000 metric tons. If global end users, and I'm talking about China in particular, but if global end users were really concerned about the delays from the Brazilian harvest or the prospects of the Argentinian soybean crop, you would think that they would be expressing that concern with a sense of urgency of coming in and buying more U.S. beans. But the fact that we're not seeing those sales either on weekly export sales reports or on daily flash sales, it really kind of makes you wonder if that really matters. It seems that the global end users are content to wait for that Brazilian crop. They have confidence in that Brazilian crop, seemingly have confidence in the Argentinian crop. I think the one area that you are seeing that show up in a little bit is the soybean meal sales. That's good, but we've got a lot of meal that we have available to sell. So we're not, I don't think at this point, Tony, talking about increasing the crush in order to have more meal for exports, at least not yet. The crush has been running very, very strong, and we've got a lot of meal stocks at the moment.
Ted, we're kind of talking feed grains right now. Let's come back and we'll talk about who's consuming those feed grains, i.e. livestock. That's all ahead. Market Day Report continues in a moment. So cash cattle sales have been developing this week and probably will develop even more, and especially as markets are moving in lower territory. Cash cattle in the south, 205, 206, north 207 to 209, and looking at dressed right now at about 328. All right, let's go from cash to live cattle futures in Chicago. $1.47 lower on the February, 202.05. And even with that, we're $1.50, $1.70 off of the day's low. Actually, yeah, somewhere in that neighborhood. Nearly $2 off of the day's low. So April at 198.02 is down $3.27. Feeder market Look at those losses. Yeah, a $5 bill lost on the March contract at 265.65. By the way, I've been listening into the Cattle Facts annual Outlook seminar from CattleCon 25. They're expecting prices here this year to average in the upper 90s, well over 200. So we'll keep that in the background as well. Over to the hog market before we go back to Ted Seifried. In February, hogs down 3 dimes, 86.35, 104.20 on the July. That's down 30. All right, Ted, we're seeing a sell-off in the proteins. What's happening?
Yeah, Tony. But like you said, I mean, we're over $2 off the lows in live cattle, and feeder cattle getting close to that number now. So it was a lot worse earlier. But here's the thing, you've got a market that's a mature bull market. It's been multi-years of a bull market. You have the funds with record long positions. And then you have things like, okay, we're going to start bringing in cattle from Mexico again. And we're not going to go ahead and put a 25% tariff on those cattle, at least not for another 30 days or 28 days now. So those two things took away a little bit of a bullish component that we have for the market. And so when you have the money managers that are as long as they were, at some point they say, well, I think that's about it for now. Let's run for the doors. And you're seeing a bit of a correction. Now, we have gotten down to some key support points in the form of the longer term uptrend channel. So we'll have to see how we act here. And like we said, we've already bounced $2 off the lows in live cattle. So far, it's a hold. And these are the kind of things and bigger swings that you can see in mature bull markets. The question is going to be, what does it look like tomorrow into next week? Are we going to break that support? If we do, you still have a lot of fund long liquidation that can occur, and it could be a much deeper correction if that's the case, Tony.